Morning guys, this is Mr. Chuck here. If you're watching this, you're definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there, and I promise you that will make your academic problems of accounting a thing of the past. With that out of the way, let's get into the lesson of the day. Now, in this morning's lesson, we're going to be looking at a cash flow statement. It also includes some notes to the balance sheet, and we'll try by all means to make sure that by the end of this lesson you understand how your cash flow statement works. Now, once you're required to do some notes for the balance sheet, just know that you are going to need that information in the cash flow statement. So it's very important that you make sure that you analyze your information correctly so that your cash flow is not negatively affected. Now, the first thing here, they're saying that we need to draw the following notes to the balance sheet. We need to do the ordinary shareholders equity and the retained income. Now, when I was checking, I saw that actually in the answer book you were expected to do the ordinary share capital. So I just think that the writing here, they made a mistake. It is supposed to be ordinary share capital, not shareholders equity, because shareholders equity includes your retained income and ordinary share capital, but as equal up. Okay, now so let's get into our information so that we can do what we are required to do. This is the information that we are given. We are given the information from the income statement. We need some notes to the balance sheet as well as the information from the balance sheet. As you can see, that information has been made available to us, so we need to make sure that we use it very thoroughly. Okay, now remember, in terms of your ordinary share capital, you need to get information. Okay, you need to get information about what you are given. So let's check the information that is available to us. So according to here, when I check, we have information. Okay, they didn't give us our opening balances, and also even if you go to your balance sheet and check, you will see that for ordinary share capital you only have the closing balance. So my suspicion is that when you do this question, you'll be expected to work bottom up, so that should not be a problem. So let's start. So now here they're saying on the 1st of May 2021, the directors issued a further 2 million ordinary shares at 2 rand 75 each. So what you need to remember is that once you issue shares, you receive, right? And this affects both your ordinary share capital and uh your ordinary share capital and your what do you call it, and your cash flow statement, but we'll come to that part. So because they issued some shares, we need to record this. Okay, so let's see, we are going to go to our ordinary share capital. Remember, this is the balance at the beginning, and this is where they are issuing. So they are issuing 2 million shares, so we'll have that 2 million would have shares issued, and remember they were issued at 2 rand 75. Okay, so we will say that 2 million multiplied by 2 rand 75 is going to give us 5,500,000. So we'd have that plus 5,500,000. So it means that it's an inflow in the business. And then also remember, when you do this, that in the cash flow statement you would have some things that you need to enter, but maybe I suggest that we finish with our notes first, and then I'll show you where to insert the information. So remember, they've issued shares. Okay, now next, what we have to do, we need to get what does the information say. Next, they're saying that an interim dividend of 22 cents per share was paid on 15 October 2021. So now, I think the first thing that we must do that will make life easy for us is to draw that timeline that I normally talk about before we do anything, because it's going to make life easy for us. So remember, our year will normally start from March. So we'd have March, April, May, June, July, August, September, October, November, December, January, February. So now remember, they said in May they issued a further 2 million shares. So May it's here, so it's going to be plus 2 million. So we need to know that, like I was saying. And then after this, they're saying that an interim dividend of 22 cents per share was paid on 15 October 2021. And then next they're saying that on the 30th of November 2021, 500 ordinary shares were repurchased from a disgruntled shareholder at 25 cents above the average price. Now, very important for us to make sure that when we get this information, we know where to record it. So remember, the repurchase will require you to do that triangle. Okay, so this is the triangle that we have. You are going to need it. This is your cash flow, this is your ordinary share capital, and this is your return. So far they gave you the amount above the average price, which is your return income. So in other words, it is that 0.25 that they gave you. So we are also going to go to our return income. Remember, our return income will have balance at the beginning of the year. Then we'll have our net profit after tax, and then would have repurchase of shares, right? And then we'll then have ordinary share dividends, and then would have our paid, and then would have our declared, and then we'll have our balance at the end of the year, right? So now, as soon as you get information, you try to insert it so that you don't forget. So let's check how many shares were repurchased. They said they repurchased 500 ordinary shares in November. So here it will be minus 500,000. Okay. Now it means we also need to indicate this information in our ordinary share capital note. So we'll say minus 500,000, and then so we'll say here repurchased at, we don't know the average price for now, but we know the answer will be in brackets here. And then also here, remember that those 500 shares that we repurchased, will have them here. So it'll be 500,000 multiplied by 0.25. Remember the amount above the repurchase price, the average price, right? So if we say 500,000 multiplied by 0.25, it's going to give us 125,000. So in doing this, you have already shown how to interpret your information. So remember here, what you can see, you know that we have the shares at the end, so which means that we can apply bottom up to get the number of shares available at the beginning of the year. So if you say 500,000 and then you add back your 500, you say 7,500,000, you add back 7,500,000, you add back 500,000, it will tell you that so you add back your 500,000 and then you subtract your 2 million. So it will tell you that at the beginning of the year we had 6 million shares issued. Now for now we don't know what is the average price. Remember, when you look for the average price, you need to check the two conditions. Check what happened first. So if you check here, we issued shares first, and then the challenge is that you don't have the opening balance, so you can use opening plus issued to get your average price. So it means that those two that condition will not apply. So if it doesn't apply, then it means they will give you your ordinary share capital at the end of the year. So they've given it to you here, 26,250,000. So you are going to take that 26 million. Let me do it here. You are going to take that 26,250,000, and then you divide it by the number of shares issued at the end of the year, which is 7,500,000. Then it's going to give you our average price. Okay, so let's do it like that. So if you say 26,250,000 divide by 7,500,000, it is giving us the rand 50. So it means that our average price is 3 rand 50. So if you remember the story of the triangle that I was talking about, that the rand 50 that I was talking about is going to come here. Okay, then so the total price will then be 3 rand 50 plus 0.25. The rand 50 plus 0.25 will give us the repurchase price of the rand 75. So it means when we go to our cash flow, we're going to use the rand 75 for the repurchase of shares, but we will record that as soon as we can. Okay, now let's go back to our information. So remember, we have our repurchase price. We got the rand 50, so it's at the rand 50. So if we say 500,000 multiplied by the rand 50, it's going to give us 1,750,000. Okay, then from there, what do? We work bottom up. So here it will be 6 million shares issued at the beginning. So you know that it's at the beginning of our financial year. So let's work bottom up. So remember, if you work bottom up, where you see bracket you put plus, where you see plus you put minus. So we will do that. So we're going to say 26,250,000 minus 26,250,000 plus 1,750,000. Then we subtract 5,500,000. Then it is giving us 22,500,000. So we'd have our 22,500,000. Let me just write it properly. Would have our 22,500,000. Then you will be done with your ordinary share capital. I feel like ordinary share capital is the easiest node to complete. So you are done with your ordinary share capital. Okay, and then after this, then we need to check how are we going to get our information. You have to go back to your analysis. Remember, they told us here that at the end of the year they had 7,500,000 shares. This will help us to calculate our interim and final. So remember, they said an interim dividend was paid on the 15th of October. So October it's here. So it means before they sold, they had 8 million shares here. Because if you say 7,500,000 plus 500,000, it will give you 8 million. So it means that when they pay interim dividends, they had 8 million shares. So that's what we are going to use. So in terms of interim, you are going to say 800,000 multiplied by, let's check how much did they say they paid. They said they paid 22 cents. So you multiply it by 22. Okay, so let's see. 800,000 multiplied by 0.22 is giving us remember I said 8 million. So 8 million multiplied by 0.22. So 8 million multiplied by 0.22 is going to give us 1,760,000. So we'd have that 1,760,000 here. Now let's hear what they are saying about declared shares. They are saying that a final dividend of 12 cents per share was declared by the directors entitled to the final dividend. So how much was that dividend? It was 12 cents. So now let's check how many shares did they have when they were declaring. They had 7,500,000. So which means that 12 cent will be declared on 7,500,000 shares. So we'll say 7,500,000 multiplied by 0.12. Okay, so let's see how much we are going to get. So 7,500,000 multiplied by 0.12, it is giving us 900,000. Okay, now that 900,000, what we are going to do, we will say 1,760,000 plus 900,000, then it is giving us 2,660,000. Okay, 2,660,000, and then after that we need to get our net profit after tax. So let's hear what they are saying with regards to that. Now the next information that we are given, I saw on the income statement there was something about income tax. So they're saying that income tax is 28%, so which means your after is 100 minus 28, which is going to give you 72. Okay, so let's test it so that I don't tell you guys lies. So if you say 100 minus 28, you're going to get 72. So which means to get that after, we're going to have to use our income tax, and this is where we will apply our bottom up. So we're going to say 2,072,000 multiplied by 72 over 28. So let's see how much will be our net profit after tax. So 2,072,000 multiplied by 72 divided by 28. It's, let me see, 2,072,000 multiplied by 72 divided by 28. I'm getting 5,328,000. Okay, let me confirm, because I don't trust these calculators from the phones. So let's see, 2,072,000 multiplied by 72 divided by 28. Yeah, it's giving me a 5,328,000, so which means our answer is correct. So let's get the balance of the retained income at the end of the year. So we're going to say 7 million 7 million plus 5,328,000, and then we're going to subtract 125,000, and then remember your ordinary share dividends have to be in bracket, and then we are also going to subtract 2,660,000, and then the answer that we get is 9,543,000. Okay, so we have completed our retained income and ordinary share capital. But remember guys, because this is a very complex question, so I'm going to end this session. This is the first part of the session. I'm going to end it here so that our lesson doesn't become very long, and then in the second session I'm going to continue with the cash flow statement. But I hope that you guys have managed to understand this very thoroughly and well, and that you are comfortable with everything that we have done. So in the cash flow statement, what I'm going to do, I'm going to complete everything after that. Thank you guys for watching. May God richly bless you. If you want me to become your online tutor, you're more than welcome to get in touch with us by using the details that are available in the description of this video. Our lessons start from 500 per month, where I'll give you 2 lessons per week online. If you want more than that, you are more than welcome for us to negotiate. So let's make sure that we make accounting as easy as possible. And I just want to let you know that I'm here to make that dream of academic excellence for you a reality. Just get in touch with us, and I promise you that you will never regret. Thank you so much for watching. God bless you. Don't forget to share this lesson with your friends and classmates, and I promise you that we will make accounting to be small waters. God bless you. Thank you. Shalom.